Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And with FOMC discussion to be had, let's take a look at what the markets have done since we recorded last week. So, Tori, why don't you start us off with gold? What's gold done in the last couple of days?
Well, all in all, it doesn't seem like it's done a whole lot. We're recording at 2,326 basically right now, which is down 1.2% from last week's recording. Silver's down at $29.74. We were right around $30, so that's down 1%. Platinum $9.67, palladium $9.22, and down 3% and 1.5% respectively. So that doesn't sound like a whole lot, but we did have a lot of volatility. I mean, from Thursday's show release, you saw some whipsaw. Friday was a major down day, and that was the opportunity that we were waiting for. Really, that came off around 2,370 all the way down to just right around 2,300. And so there has been volatility. It just doesn't look like it week over week.
Yeah, and certainly starting with gold, big bounce, pretty decent fall, like you just mentioned, on June 7th. I think that was, $23.90 to $22.90?
Yeah, we had about a $70 peak to bottom.
Yeah, but failed to push below the $22.75, $22.80 price back from the beginning of May. So in a little bit of a bounce here back up. So we'll see if gold continues back up. We still may get our sell in May and go away, although May is over. May has gone away, and June is about halfway there too, because I just keep getting older and the clock keeps turning faster. I guess it's all relative.
Well, and like we talked about last week, when we get these drops, they're not followed by a slump that lasts a month or two or three. They're a 1 or 2 day event. And if clients are watching, if they're trying to position, they want to take advantage. We're not trying to catch a falling knife anymore, is what I'm trying to say. The market dynamics have not changed. We are going higher in spite of the fact that China, or the Asian market, especially China, curiously did not really show up into the market last month. They were noticeably absent. But that doesn't seem to change the fact that gold remains strong at the 2,300 level. I do expect to see it drop. I would like to see it go back and test just below 2,100. I don't know if that's even possible given the situation here in the U.S. fiscally and the world situation. What do you guys think?
Well, therein lies the issue. At what point in your multi-decade career have you seen so many underlying fundamentals aligning?
Never.
So negative fundamentals economically and otherwise, monetarily, fiscally, and all of that is something that gold's going to respond to. It's not one geopolitical event that's occurring here. Right. Geopolitics is part of it, but you have geopolitics, you have money supply, which is constantly being increased and will not change. You've got debt, and on top of the debt, the unfunded liabilities will not change. You have the U.S. dollar index at a relative high, and gold is still high. You have the inflation issue. Gold also does well in times of deflation. You have a high bond yield market, and gold is still strong despite that. And then monetary policy, obviously, coming from the Fed, whether it's quantitative easing or obviously manipulation of interest rates, which we'll get into here in a little bit with the FOMC release. Those are all things that are pushing the gold price. What's going to change, Rob?
Nothing. And of course, today's CPI came out lower than people had expected. My big question is what happens next month when they revise this current print higher?
Yeah.
Is anybody even going to pay attention?
Well, that's page 17 news. No.
Yeah, that is.
Yeah, that's page 17 news. Nobody cares.
Because how many times have they revised their numbers? Come on.
Well, they revise them, and you have to remember there's a lag effect here, right?
Yeah.
So CPI, yes, it was 0.1% better than expected, right? So we're up 3.3% year over year. And 3.4% was expected by the master economists. And then it was flat month over month. So May wasn't any higher than April, and 0.1% was expected. We'll just wait till August and September when all of this reflation of the base commodities that we talked about on the show a month ago gets absorbed. And you have an adjustment. You're right, after the fact. And page 17, Miles, it might be deeper than that.
Well, and how many other people are like us looking at the numbers that they put out on CPI? I have to think the market has already taken into consideration the fact that these numbers will be revised higher. They already see that. Come on, it's a game.
Yeah. Well, you saw the game this morning in the equities markets going to all-time highs, and then the Fed comes out and says, there might be one rate cut now in 2024. And remember, they promised 3.
Yeah.
They expected 3, and the market priced in 6. So, Miles, tell us what happens now with the equities markets. At what point does this catch up with them where there are 0, maybe 1 rate cut in the year?
Oh, at what point does reality catch up with the price in the
Yes.
S&P? Why does it have to?
Maybe it
No,
doesn't.
here's
I
what's
don't
interesting.
think it does. I don't think it has
Okay,
to, Miles.
let's talk about why not then. You guys,
You're with
you tell
me on that one?
I'm with you on them. There is so much money.
That's it.
Yeah, well, let's go back 10 or 15 years, okay? Let's go back to sitting in our conference room, chatting about markets. I wrote this down. This goes back to when I was still in my 20s and I was starting out and I didn't know anything. And I used to write stuff you guys said down. And I wrote down a little quip from Drew Kroll, our numismatist. He threw something out, and I've always remembered this. He said, imagine if the Dow Jones goes to 20,000 and nobody cares. This goes back when the Dow was like 10, 11,000. Like this is pre-2008 by far. And his argument was we're moving into a period of time where over the next 5 or 10 years, inflation is going to be so bad that the Dow Jones is going to double probably by 2015 or 2020. And nobody will care, which is an insane concept at the time. Yeah. And lo and behold, not only did we double, we had another 10 plus thousand on top of that in about the time frame he was talking about. So why does it have to? Because it doesn't mean anything.
Well, and you're right, too, because what else is an underlying dynamic with the equities markets is continual buying through 401k plans, through IRAs, right? Managed money. Every month there's buying, whether the market is up or down. It doesn't matter. So you do get a supporting factor there. But that's actually a great point, you guys, because that's part of the money supply issue.
Yes.
Like you don't have to have the central bank printing money to increase the money supply. The equities market boom increases money supply. GDP growth, economic growth increases money supply. Stock performance in general, cryptocurrency is in what has happened in that bubble type of response in that market. That's money creation. And so when adjusted for inflation and adjusted for the direct and indirect money supply, gold has $4,000 priced in.
It's going to happen.
Yep.
We're going to be pushing somewhere between 2,500 and 3,000, my prediction, by the end of the year.
And nobody's going to care.
Nobody's going to care.
Like
They don't
Miles
care
just
now.
said. Right. It goes to the 20,000 Dow. The Dow's at 40,000 now, and nobody cares.
No.
So you're right, you guys. It could go to 60. It could go to 80.
Probably
but gold's
will.
going to go to 3,500 to 4,000 at that same period of time, and nobody's going to care. And that's what inflation does, is it dumbs it down. It's a hidden theft, a hidden tax. We all get stuck in a paradigm of price increases over our lifetime are normal. And that's why you don't shy away from gold as the hedge. Now, the white metals we haven't even gotten into, that's where the volatility lies. Okay, we've been hoping for a pullback in the metals. We got a 6% drop from the high in gold. Silver's 8%.
Yeah.
So there's the white metal volatility. The gold to silver ratio has it touched 80, I think, yesterday. Right.
We're about, what, 78 now?
We're 78 now.
Yeah.
We got down as low as 72 before it reversed back up to 80.
Boy, howdy, I was able to make some trades at 72. Oh, my goodness.
Wonderful.
Yes.
And so as we get into those clients that had entry points in the 90s, you get some exits that are really fun as we compound our ounces. But Miles, talking about the silver down 1% this week, stuck here though, to me, silver is surprisingly strong in the mid-29s.
You think?
I mean, it's 2% different than gold, and you were raving about how strong gold is.
Yeah.
And
I'm
so
such a gold bug, though.
I am too, and I'm not a silver lover, but we'll let the chart guy point out
come
the
on, chart guy.
technicals.
Chart monkey.
Dance chart monkey. The one line in the sand for me, I think, is sitting kind of just above 29, let's say around 29 and a quarter to 29 and a half, that range. Because that's going to be the high back in April where it really said, I think I can push above 30. And then we had a little bit of a pullback there. And then obviously we had the blow through where we went all the way up to 32 and a half. I don't think we got to 33, but 32 and a half. So we're actually down about 10% from the high, but coming off a pretty significant rise from there, going from 26 to 32 and change, and then back down to just above 29 on the top end. I mean, we've been above and below 30 today.
Right. Back and forth. Yeah.
Yeah, this 29 and a quarter is kind of a line in the sand for me. I would argue it probably gets breached to the downside since we're inching below it and we haven't really had any reason for it to turn back around thus far. But we're still talking about silver ultimately just since the end of February. I mean, I don't even want to say just this year, literally just in the last handful of months, taking a 45, 46% rise. So to think it can't come back down to 26 and still be in a significant upwards trend, I think would be great.
Oh, I think it'd be wonderful.
Wouldn't that be amazing?
It would. I mean, we went up 48%. Why would we be unhappy about a 20% retracement just to form a new base?
Well, and if we stay in the 2200 range and we get down into $26 silver, that's going to open up some more ratio trades.
Well, and what's our real line in the sand for gold? Just to kind of compare the two. So our real line in the sand for gold has been this top that we haven't been able to break above since 2020. Well, if you take the silver chart, even though I know silver's not at all-time highs, but you lay the silver chart over top of the gold chart, you still see a very similar pattern. You've got this ceiling that's been in place for the last couple of years that we just broke above. Well, that ceiling is around 26 and a quarter. So just like gold, we've taken two big steps forward. We're kind of playing around above where the real line in the sand is. We're seeing the same thing in silver here. We've taken these two big steps forward up to 30, 32, 33. We're back down to 29 to 30. Even if we push back down to 27, 26, I mean, when you look at a chart here, you're still talking a significant move up in a brief period of time. And you're above the previous trading range. And that's what I want to point out. We've moved up to the second floor. We're not playing ball on the first floor anymore. We've taken the elevator up to the second floor. Now we got to play ball on the second floor for a little bit before we can step up to the third. So that's what I think both metals are doing.
If you're Rob, you're on the 90th floor.
Well,
sorry, Rob.
But if we can just stay where we are, if gold holds and silver does get back into the $26 range, we're almost 90 to 1 again. We're just there.
yeah, which would be great.
What an opportunity that would be. I'm with you on this, Miles. I think we have moved to a new level. You know, I thought there'd be a lot of resistance at these levels where we are in terms of the price action. Not at all.
Well, let's go back to 2008 to 11,
Yeah.
the response from the financial crisis. I remember this like it was yesterday, and I had people selling gold at just over 1,000. We went to about 1,050. First time gold had ever crossed 1,000 in 2008. People saying it'll never happen again, not in my lifetime. They're dumping ounces.
They had been waiting for years.
Thinking it might happen. And then you blink, the financial crisis hits in. Now, gold did come down to just under 700.
It did, but within just a matter of a handful of weeks, the price of physical gold was back over 1,000.
I mean, it was so fast and never to look back because we ended up running in that subsequent 2 years, really from mid-2009 to mid-2011. We ran to all-time highs. We hit 1,925. And there were pundits out there saying gold's overshot. I mean, even some people that claimed to be gold bugs said, oh, we're done. Gold's going to $200, $300 an ounce. And I was like, we'll never see below 1,000 again in our lifetime. This is a stair-step long-term effect that I mock you jokingly about the multi-story building, but we are. This is a perpetual climb.
Yeah.
And 1,050 was the floor in 2015. That's as low as it got. We retraced down that far now. This could be the same one.
2180 or 2080, let's say,
Yep.
even there.
Yep.
We saw 1995 back this spring. Will never be below 2000 from this point forward.
There you hear it. So there's Rob's prognostications, and that's based on wisdom and experience, and I concur. I mean, I honestly think that the higher we climb, the more established that 2030 to 2080 level becomes as a floor, Miles. And please tell us if we're wrong. That some of that is technical, but a lot of that is just sort of subjective with, again, priced for inflation, money supply, monetary policy, fiscal policy not changing. Why would we ever go back to even $1,400 gold?
No, that's, not happening.
Yeah. Yeah, the farther we get away from 2000, the easier it'll be to say that. But prediction in hindsight is the coward's path, and we'll applaud Rob for jumping out ahead of the rest of us. I actually don't disagree. I before E except after C, if I remember correctly. So what's the exception? I would say some type of fire sale causing catastrophe.
Mostly in the equities markets.
Yeah,
right?
if there is a fire sale, it'll be driven by an enormous drop in the Dow and the S&P.
Yeah, just like last time, just like 2008. The only reason gold even came down below 1,000 to begin with initially was because of the fire sale in 2008. And what did it do? It turned around and tripled from there, more than tripled.
That's right.
From 650 to 2,000.
And that's a great point, because that's where value will be. That's when you just really load everything in. And it can be in both asset classes. It doesn't matter. Things will overshoot to the downside as well. And we will take that opportunity if it happens, because we saw an example of that in 2020 as well. Don't forget, with COVID hitting and the equities markets trying to absorb the effects of shutdown and short and long term, and you had a major drop there. Well, gold and silver got pulled back at the same time, and that ended up being the new floor for this cycle, which was very similar to '08.
And it was very short-lived. Now we're not talking a matter of weeks. We were only talking a matter of days. And once again, the physical price for a bar or a coin separated from the futures market.
Great point.
By a significant margin. I want to say 20 or 30%, but I don't want to own that number, but it was significant.
Well, that's a great point.
Yeah, and a 3-week waiting list.
Yes.
So that's another good point. And product unavailability.
Right,
Even 100
right.
ounce bars we couldn't get in those two environments, right?
We were
on
down
silver.
to 1 kilo bar of gold per customer per day.
Yep.
And really fortunate to be able to provide that. We didn't even have Krugerrands, the most common of all bullion coins. It went like that, and waiting lists, money on account, millions of dollars sitting in our bank waiting for product.
Well, I remember when the initial decline happened too, and silver got pulled down over 50%, and it went from 16 down to below 8.
Yep.
And the silver American Eagles stayed right at 16.
Yep.
They never dropped.
Nope.
They set their own physical market, and we saw similar in 2020. And the silver American Eagle, the premium has never really come back to normal since COVID hit.
You're
We've
right.
fluctuated between 18 to 60% over spot. And Rob, that's why it's such a great point, because no matter what that spot price does, it doesn't mean you're going to be able to buy anything at that price.
Or close.
Or close. You'll be paying exactly what you're paying today in most instances if you see the drop.
Yeah.
All right, Miles, give us a zinger to close it.
That do it?
Let's have a second one just in case.
Just in case. Okay. Let's see if I can inhale some air here real quick.
No, not a second burp, a second closing statement.
Okay, I got it. Yeah, so I think one of the biggest things as we sort of wax philosophic about our crystal ball predictions of what's happening going forward is just trying to remember that in navigating this, we recognize that not only us, but a lot of our clients are still trying to pad their gold position. So it's fun to go through this stuff and, like we do, look for these pullbacks from time to time. But guys, I think we're all on the same page here. I think we know that the writing that has been on the wall for a long time is starting to rear its ugly head again. Just like we saw in the early to mid 2000s, and we know where that ended up. And I think it's a good reminder to people out there that were in this market back then. These breakouts we're seeing, this isn't 2009, 2010. This is like 2005, 2006. We haven't even seen the water breaking through the dam. Because I remember when I came to work here in '05, I watched gold triple over the next couple of years, thinking I've never seen a market move this much, this fast. And I could not believe how people didn't see it yet. And I think that was the thing that kind of fascinated me, is I watched gold go from 400 to $1,000 in like 2.5 years. I couldn't believe it had moved that fast. But when gold hit 16, 17, 1800, boy, there were a lot of people in America willing to buy at those prices. So I think one of the biggest reasons why we go through these markets on a weekly basis and we're looking for this stuff is we really want to give people all the opportunity they can to take advantage when the taking advantage makes sense, like now, so that we can be positioned to come out on the back end of this stronger and ready to take advantage of whatever else is next around the corner. So that's why we talk about gold. That's why we talk about ratio trading. And that's why we talk about pullbacks, is because we just want everybody to get to where they should be before it's too late. Hope we're helping. That's certainly our goal. I know that's at least mine, and I'm pretty sure that's both of yours as well. So thanks again, guys. Appreciate you coming in. We'll have to see what happens over the next week and what we talk about next week. We didn't mention the white metals too much beyond silver, so I think we probably want to talk a little platinum next week, because platinum's getting interesting to me again too with some of these pullbacks. So we thank you again for joining us this week on Golden Rule Radio. If you liked what you heard, hit the YouTube buttons for us. That certainly helps us out, gets us in front of some other people. You can find some additional info on our website at McIlvaney.com. We're also on Twitter at ICA Gold or Facebook at McIlvaney Financial. Better yet, if you'd like to speak with one of us about your personal precious metals portfolio, feel free to give us a call at your convenience. We can be reached at 800-525-9556. Thanks as always for listening, and hope you have a great week.